And joining us now to share his commentary on the day's market performance is Vincent Anthonyrajah from Differential Capital. Vincent, thanks so much for your time this afternoon. Let's start off in the US. We got that jobs report that really shook markets. Hiring cooling in the US, with the economy only adding 73,000 jobs in July, which was way below market expectations. Following the report, in an even more shocking move, we saw President Trump fire the top boss at the Bureau. I mean, is this report then anything to worry about, or are we really worrying about what took place post the report was released, that being the top chief of the Bureau of Labor Statistics being fired? And does that also play into, I guess, concerns around the independence of such agencies?
Sure. Thanks very much, darling. So you're quite correct. I think, firstly, we've had a very strong July for markets. That's sort of the backdrop that global markets went into August, or the 1st of August with. And I think the markets were pricing in a lot of good news, and that print was quite shocking. So definitely the print on its own was concerning. And I guess it doesn't help when there's sort of a volatile, what appears to be the start of a volatile policy decision. Because once you start tinkering with how statistics are disclosed, etc., that adds a little bit more risk to the situation, and markets tend to get a bit more fearful around those situations. So I think when you couple the two together, a strong run, a disappointing print relative to a very strong run, and then potentially more policy risk, I think the markets, it's no surprise that the markets pulled back quite strongly.
And just on the back of that report then, Vincent, could it move the needle when it comes to Fed rate cuts? Are you pricing in a cut come September, or are you just, sitting on your hands waiting for more data to come out?
On our side, I think the information is starting to tilt more towards a probability, an increased probability of a rate cut. I think the this week print is one example, but there actually have been, there is other data out there that suggests that the US economy is taking strain in certain zones. I mean, it is still broadly strong, but taking some strain. I think the key question that, in terms of the data that we're monitoring, is the impact on inflation, which seems to be the main point around the pivot that may happen from the Fed. So at this point in time, because there's a large fear of tariffs driving inflation, and the data is still coming out slowly, I think that's what we're going to be watching quite carefully to decide whether there's going to be a further increased probability of the Fed cutting rates going forward.
Now let's bring it back home. What's boosting the JSE, Vincent? There was, that downbeat jobs data we talked about earlier. And, SA still hasn't managed to seal a deal with the US. What's behind the optimism we're seeing in the local markets?
Well, I think the JSE is a unique beast in that our SA-centric companies, there is a little bit of a bounce today, but today's move is really led by idiosyncratic factors. We've got FirstRand, which is received some, let's call it, relatively positive news out of the UK concerning a potential fine. And you must remember, FirstRand is a very large component of the bank's index, and by definition, the all share itself. And that stock has moved up quite a bit. We've also seen Richemont react quite positively after a few weekdays. And then if I could factor in the rest of the moves, it really is the gold stocks and some of the commodity miners, which is the strength of the JSE, in that it's got diversity in the sense that, yes, while the overall news on tariffs is negative for domestic South African companies in general, the points that you made earlier around potential job losses, some critical areas of the economy like agriculture and let's call it vehicle manufacturing and exports are really under threat. But when you look at the overall picture that's happening globally, there's still a strong underpin for commodity recovery, which continues to happen. And then again, when you've got this sort of global uncertainty continuing, policy error risk continuing, commodities such as gold continue to get benefit, and that drives a day like today.
So let's look at some of those SA Inc. stocks, particularly Impact, that's released numbers today. Profits declining by 27%. And also interesting to see, quite important to note, that they are pegging growth on growth within the SA economy. And, prospects don't seem to be that great. Just what have you made of those numbers?
Look, I think, let's call it, the difficulties in their specific industry have been quite well flagged. They're not the only ones going through challenges. But I think you touched on an important point. I think going into the second half of the year, there seems to be a lot of deflation in confidence from South Africa-focused companies. And that really is around the uncertainty that we're facing around what is the second-order impact that these tariffs are going to have on the South African economy. We have, on the positive side, we're seeing rate cuts come through, and steadily that should help a little bit. But I think the overall fear is the sentiment that what could have been, what some might feel we've probably could have handled the negotiations better. Although that's also hard to say given how volatile the parties which we're negotiating with are. But nonetheless, the situation isn't an ideal one, and it certainly seems like optimism around the domestic economy certainly has waned, and the market's starting to price that in. And we can also start to see it from executives, such as those at Impact.
Let's move over to the property sector. There's been a back and forth for Mass's assets, Vincent. Now, after Hyprop dropped its bid, Prime Capital is back with a voluntary offer to acquire the shares to acquire the Mass shares it does not already own. What are your expectations on that front? I mean, a few weeks ago, shareholders didn't agree with Prime Capital's strategy for the group, which included selling off some assets.
Yeah, darling, that's a very difficult one for me to judge at this stage. I think it's one that we're going to have to watch closely and see how it pans out. I think these corporate actions like this can be quite tricky to predict what happens next. I think at the end of the day, Hyprop's board has got a view, and also their shareholders have probably expressed where they would like to see that company heading, and that's probably influencing how it's approaching this issue. So it's very difficult for us on an issue like that to predict what's going to happen next. It seems like it's one where we're just going to have to watch and see.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on what counters your industry peers are watching closely.
Something that has been knocked incredibly is Novo Nordisk. The theme is still intact. And if you haven't gone in now, I'm looking very carefully, because when you make losses like that, everybody gets wounded, and they kind of putting plasters on and kind of looking after their bruising. But this is a good business that's been around for 100 years. I think if you looked at the absolute numbers, they're still strong. And although I'm not giving you a loud shout to buy it, I'm looking at these levels. I think they have knocked it far too heavily, and now there's going to be a level where it looks attractive. And believe me, they will still sell Ozempic and Wegovy and so on. But I think this whole sell-off that we're seeing now in Europe is actually going to throw up some very attractive entry points.
Since this week was the 10-year celebration of Ethereum, I chose the BlackRock ETH ETF, which is the Ethereum, and that's just purely because I'm just following where the money is. I mean, you look at the network expansion and more transaction happening on that chain, and seeing about 10.2 odd billion into the ETF inflows into Ethereum. I think we have a price target of above 5,000 internally on Ethereum, so I'm just following where the money is and just taking the BlackRock ETF.
So Kia going with crypto with that BlackRock Ethereum ETF, and David picking Novo Nordisk. What are your analysis on those counters?
Sure. Let's start with Novo Nordisk. Maybe just to unpack, I think David's absolutely right in that I think any investor should be intrigued when a stock that large, which has dominated the narrative, just to give you a bit of background, darling, Novo Nordisk, let's call it, had a very strong run until the mid of 2024. Let's call it a year ago or so, on the back of those obesity drugs that they were really leading the market with. And since then, firstly, the take up hasn't been what they expected, or certainly the market expected, and it's been a bit disappointing. And then the competition has been really fierce. And this is generally the cycle when it comes to pharmaceutical companies. So as, let's call it, the hype around obesity drugs fades, there are other profit drivers that one could start to look at and to see whether the company is sold off. Having said that, in the shorter term, our investment process suggests that there's continued risk of further downgrades to expectations, and we would need to see that settle in terms of the risk. So particularly when it comes to competitive issues and what that could mean for their margins and their market share. So I think that's something we're going to have to continue to watch. And as that settles, I agree, the stock could be certainly worth a second look.
And what about the ETF?
Yes. So the ETF, it's really a play on Ethereum. And as many would know, that's potentially an alternative to Bitcoin. And if I could, just comment on the broad differences between the two. While Bitcoin seems to have been the first mover really for most crypto investors, the view by many experts is that, let's call it, the architecture on which Bitcoin is based doesn't lend itself to rapid transactions, etc., whereas Ethereum is more suited to that. And so generally, I found that crypto investors have started to diversify away from Bitcoin towards Ethereum, which is more suited to, let's call it, high frequency transactions, potentially touting it as a medium of exchange going forward. Now, again, our investment process, we're really cautious of both these two asset classes. There is extreme volatility around both. But I would say for an investor that wants to put a small amount of capital at risk, understanding that these are highly volatile investments, it certainly is worth considering that investment thesis, because there is some logic to it. I know some would go very far to say, okay, how do you even begin to value these things? I think you have to be a bit careful. I think both of these two, let's call it, currencies, if you had to view them that way, have had adoption, and you should be careful to be too dismissive of both of them. If you had to look at an example of the number of S&P 500 companies who, part of their own investments are into Bitcoin, as an example, they're starting to allow transactions in that. I think as that adoption continues, you could see potential upside risk for these two asset classes. And then we must also couple it with the same driver that is driving gold and other precious metals, is that when there's global policy error risk increasing, in the sense that central banks make a mistake or governments decide to become a bit too greedy and print too much money, allow too much inflation, these other alternative stores of wealth or stores of currency are certainly things to diversify yourself again.
All right,
but I
and
will
just
highlight them. Yeah.
Sorry, I just have to interrupt you there because we are running out of time. Just quickly, we have about 30 seconds to go. What's your stock pick?
Well, our stock pick at the moment is Glencore. We think there's two critical drivers of that investment case. The first one being a turnaround in global coal markets, specifically metallurgical coal, which is a big driver there. And the other component of Glencore is the ability to unlock value by simplifying the group. We think if you see how they're starting to restructure the group with simple things like positioning for buybacks, selling businesses that are non-core. I think that allows for potential further value unlock. But in the shorter term, certainly the turnaround in coal, we think is going to support the investment case, together with very strong copper prices. And we think Glencore should be able to uplift their production in the second half going forward, all of which bode well for stronger profits and potential to do even further capital optimization going forward.
All right, let's leave it there, Vincent. Thanks so much for your time and sharing those insights. And that was Vincent Anthonyrajah from Differential Capital.